today's Money Watch, we are looking at inflation. According to new data, prices edged up slightly in October compared to last year. But that's close to where the Fed wants us to be. And adding to the good news, not everything is more expensive. While food prices rose more than 2%, energy costs actually fell almost 5%. CBS News business analyst Jill Schlesinger is here to break it all down and what it means for your wallet. Good morning, Jill. How you doing?
Doing well.
All right, so inflation rate edged up in October. What's behind the increase?
So we have both monthly and annual slight increases. The good news was that it was basically expected. So in the month-to-month numbers, we saw some strange categories that ticked up. We saw, for example, used cars and trucks were up. We also saw that one of the big pushes in the inflation rate has been shelter. It really does account for a lot. And so we saw the price of rents and housing costs up a tiny bit, which did push up the overall rate. Now, if you look at, airline fares up and shelter costs, and you put it all together, you get a slight increase, 2.6% from a year ago. It's higher than 2.4%. Fed kind of wants us at 2%.
So did you find any other good news? Any place where people can get some relief?
Okay, wait a second.
Jill, please.
I have to talk about proteins. Because I'm a big protein person. I don't love carbs, except for pasta. But meat, poultry, fish, and eggs down by 1.2%. How long have we been talking about egg prices, gang?
Yeah.
Okay, apparel was down by 1.5%. Gas prices down. And by the way, gas prices are down by 12% from a year ago, which is what has been providing some big relief to folks when they live their lives day to day throughout this economy.
So I got a little note here. It says the Federal Reserve Board is going to meet one more time before the end of the year. Why is that significant, and what might they do based on this report?
Well, the question really becomes the Federal Reserve is going to look at the data, and they're going to say, hey, should we cut interest rates again? Because remember, they had increased interest rates to fight inflation. The inflation rate, not prices, the price increases, the rate is coming down. So now the Fed might look at the data and say, well, maybe we should leave the rates a little bit higher for longer until we get down to that 2% rate. They're going to look at all of these economic reports, inflation reports, jobs reports. They're going to determine whether or not to cut rates at that December meeting. I think they'll probably go by 0.25% rate, which would mean that we are 1 full percentage point lower than where we started the year in the federal funds rate.
All right, so home buyers are still waiting for mortgage rates to come down. What's going on there?
You're a fashionable guy, right?
I try.
What's the color of the year? I don't know what it is, but I'm going to say, let's say it's black.
Green?
Okay.
Let's say green or black is the new color of the year.
Okay.
So the reality is that the new normal for mortgage rates is above 6%. And that's not making people happy.
Wow.
And I need to point this out, that the Federal Reserve controls short-term interest rates. Longer-term interest rates are actually determined by the 10-year Treasury and supply and demand. Right now, 30-year mortgage at around 6.8%. We've been above 6% for 2 years. And it is really important, if you are going to buy a house, not to presume that you're ever going to see that 3% 30-year fixed-rate mortgage that we saw a few years ago. We are in a new normal range.
Yeah.
Most of the economists I talk to say, if we get below 6% a year from now, that would be helpful, but don't count on it.
Wow.
Thank you, Jill. Always giving it to us straight. Thanks a lot. Sure. See you.